Hello and welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, January 24th, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 2.05 to 1.33, remaining in bullish territory. The total count of securities in bullish or bearish patterns fell 6% to 2,296. The count of bearish stocks increased 23%, while the count of stocks in bullish patterns decreased 20%. The Sand to Pearls P&F Market Breadth Summary chart shows us a market now 20 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 21 points for the 13th decline in 25 weeks. At a positive 423.94 points, it remains above the October 2013 top and continues above the September 2012 top and the November 2011 top, and below all other 5 tops above plus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 2 accumulation days and 3 distribution days. Of the other indexes, the S&P 500 deposit receipts and the Diamonds Trust both ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Tuesday 1:14 close, we got a CCI 20 daily zero-line reject entry. At Friday 1:24 close, it dropped below the plus 100, so we exit the trade at next Monday's open. The result of this trade simulation will be reported in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 49 weeks ago, while the daily CCI 20 began a Woody's uptrend 18 weeks ago. The CCI 20 weekly continues above plus 100 and remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 3 of the bottom 5 are negative. Bullish, computer hardware, disk drives, and networkers remain in the top 5. Oil services remains in the bottom 5. Oil remains in the bottom 5. Oil services has entered the bottom 5. Bearish, gold and silver continues in and now leads the top 5. S&P retail remains in the bottom 5. Focus this week from ZeroHedge.com. Which door will Yellen choose? By Bruce Crasting. From the article, we only have 2 scenarios. Yellen opts for a continuation of the taper, and we have an immediate blowout in the EM economies/markets, or 2, she delays the taper and holds QE at $75 billion for a few more months. The next leg down in markets would start in less than a week as reality disappointment set in. Both of these outcomes have a bad ending. Either way, the concept of the Fed put is about to be tested. Seatbelts should definitely be worn tightly next week. End of the quote from that article. Thank you for joining us for this week's Santu Pirls Stock Market Commentary. We hope that you are having a pleasant weekend, that you have a great week coming up, no matter what, and we wish you, most of all, true success.